Hello, in this class we'll discuss trade plan, how to create a trade plan. So for that we are going to discuss different aspects of it. So for example, different aspects are entry, exit, risk management, and before that position sizing. So that's it. Position sizing, entry, exit, and risk management. Position sizing means if you have $100 in capital, you would never trade the entire $100. You would try to limit your each trade to 3 to 10% of your capital so that you don't lose your entire money in one trade. Okay, now how to do it is if you strongly believe on the trade, if your feelings are strong, then you allocate higher capital. If your analysis indicates weak trade, then you allocate lower capital. But in any given position, you will not cross 10% of your capital. Second is if you're if you're on a winning streak, if you're winning a lot on trades, then you will lower your capital. If you're on a losing streak, you would slightly increase your capital. Okay, now entry, let us discuss how to enter based on support and resistance. How do we enter based on support and resistance? So, or a better way, let's discuss MTF, multi time frame, for entry. So MTF is a way of entering into stocks where you have three types of trades: position, then swing, and intraday. So there are different combinations. So let's say first is position long. So you're going long and it's a positional trade. So what is positional long? So this trade, positional means the trade lasts for more than a week and can go for few months. Okay, so this is positional trade. Swing trade is more than a day to a week. Intraday is everything that is less than a day. So what do you do in positional long? First look at monthly candlestick chart. It should be in an uptrend. Then look at weekly candlestick chart. It should be in a downtrend. Then identify support. Then look at daily chart to identify support. Okay, support is your entry. Okay, so I'm coming in. So this is positional trade, positional long. Next is positional short. Positional short is more than a week, again few months. but you are going short now, so so going short means look at monthly chart, it should be in the downtrend. Look at weekly chart, it should be in the uptrend. Look at support, look at daily chart for resistance. Resistance is your entry. Same way C will be swing long. Okay, look at weekly, it should be in up. Look at daily, it should be in down. Look at hourly chart for support. Support is your entry. Okay, D, swing short. Weekly it should be down, daily it should be up, and hourly it should be resistance. If you're trading intraday, swing trade is more than a day to a week. Intraday is anything that is lesser than a day. So how do you do it? E, intraday. Daily should be intraday long, right? Daily should be long. Then hourly should be not long, daily should be uptrend, hourly should be down, and let's say 15 minutes identify a support. Intraday short, daily it should be down, hourly it should be short, it should be up, and 15 minutes chart you look for a resistance. So what I would encourage is to pause the video and write these things down. So positional long, duration as well as criterias, positional short, duration as well as criterias, swing short, intraday long, intraday short. Okay, now let's go to chart and check stuff. So just a second, I'll move this up. So let's look at Facebook. So I'm going to show you only how one trade is done. You can apply logic similarly. So we want technical charts. Let it load. Full screen. Okay, I'm looking at Hikinashi average candles. So monthly it's a red. Okay, then let's go for weekly. Weekly it's a green, so we are looking at positional long. Monthly red, weekly green, and daily identify a resistance. So what is resistance for this stock? So the first hill. So can you see this hill that is there? This is the resistance. So identify the highest candle in this hill. So in this hill, this is the highest green candle. So this is one point. The base, the top of candle is the entry. So and this is the zone. So what we'll do, we have identified this. So if the stock reaches this zone, this is the first resistance. If the stock reaches this zone, we'll go short, and it's a positional short. Okay, so let's look at one more stock. Same thing. So let's look at Apple. So we want a technical chart. We are looking at Heikin-Ashi. So daily is green, hourly is a small red, so downtrend. And let's look at 15 minutes. So we are looking at an intraday trade. Daily was green, hourly was red, and we would identify a support zone. So support zone is the first valley. So this is a valley, this is a visible valley. What we do, we identify the lowest red candle. This is the lowest red candle and the base of it. I'll touch. So this is the support zone. If stock reaches this zone, so it is 175.91. If it reaches this zone 174.34 or 174.14, we buy, we go long, and it's an intraday trade. So similarly you can apply swing long, swing short, intraday long, intraday short, positional long, positional short. So these are the rules. Do look at them. Okay, next is exit and risk management. Even though we follow multi time frame analysis, we can go wrong. So to increase the probability further, we generally have risk management. So what is risk management? Risk management means we follow a risk to reward ratio of 1:3. It means that if you are losing $1, you would try to gain $3. So based on this, we try to put in our stop loss as well as our exit, right? And for doing that, we use average true range called as ATR, average true range. So how to do it? Now we are going to go long. We have done an intraday analysis on Apple and we are going to go long. We are going to go long at this base. So 175, 174.32. So what to do? The stock is Apple. Create a trade plan like this. Stock is Apple. We are going to enter. So entry is at 174.34, right? Then find out the ATR. Okay, so this thing is coming in between. So ATR is 0.39. So ATR is 0. This is the line is ATR. I found the current value. it was 0.39. So find out the ATR. ATR was 0.39. So based on ATR, ATR is how much the stock is volatile in the given time frame. So in 15 minutes it has a volatility of $0.39 right now. So what we do, we create stop loss and we create entry. Okay, so stop loss would be this minus this because it's a long trade. So in long trade you subtract the stop loss, and entry exit will be, sorry, not entry, this is exit. So entry, exit and stop loss. So stop loss is entry point minus ATR and exit will be entry point plus 3 times ATR. So if we lose 39 cents, but if we gain bare minimum 39 into 3, $1.17. So this is risk reward ratio. Okay, so points to remember while designing trades, find out entry. So we am distinguishing it for long and short trade. For long, find out 3: entry, then ATR, then devise a stop loss and devise an exit. Okay, same for short. Now once you have entry and ATR, entry is based on support, in short entry is based on resistance. Okay, stop loss is entry minus ATR, stop loss is entry plus ATR for short trades. For exit, the exit point is entry point plus 3 times ATR, and exit here is entry point plus, sorry, minus 3 times ATR. Because in short trade you make money if stock goes down, in long trade you make money if stock goes up. So based on this, we enter on support, we enter on resistance. Stop loss is entry point minus ATR, stop loss is entry point plus ATR. Exit is entry points plus 3 times ATR, exit is entry points minus 3 times ATR. So this is how to create a trade plan in a nutshell. Position sizing, 3 to 10% of your capital on a particular trade. If you are very strong, allocate higher. If you have weaker analysis, the analysis is showing is weak entry, allocate lower. If you are winning a lot, lower your capital. If you are losing a lot, increase your capital. Entry can be based, there are 4 types of trades, 3 types of trades: swing, position and intraday. Position is more than a week, less to a few months. Swing is more than a day to a week, and intraday is less than a day, right? Position day we have seen, look at monthly chart up, weekly chart down, and then daily chart support and all these other trades. Risk to reward ratio of 1.3 for every trade. Based on ATR, devise a stop loss and exit. So this is small recap of the discussions we had in our classroom. Okay.